Now, Darren, when I look at the residential real estate market today, there are a few ways that it appears rather normalized, actually. For example, home price appreciation rates are normal. Rent growth levels, they're pretty close to historic norms. Interest rates are even near historic norms, which is a surprise to laypersons, but that's three huge measures that are actually normal, and no one else anywhere talks about that. But there are some aberrations in today's market, the most chronic and saddening of which is the lack of housing supply. So, with that backdrop, what are your thoughts on today's overall American housing market?
Yes, we have these normal metrics that we look at when we look at home price appreciation. Now, home sales, I would say, are abnormally low, but home price appreciation is doing well. Some of the other metrics that we look at, but it's coming off of this abnormal, what I would say an abnormal period over the last 3 years or so, mostly during the pandemic, when the housing market went a little bit crazy and you saw home prices rise abnormally fast. And I would argue too fast for such a short period of time. And so you'd almost expect after a period like that to see a correction in home prices. And we saw a slight correction in late 2022, early 23.
Right.
But now home prices are, as you mentioned, kind of back. Home price appreciation is back to normal. Actually, maybe a little bit on the high side of normal, 5 to 7% home price appreciation that we're seeing annually. And so there is this sense that things look normal, but below the surface, there are, I believe, I would argue, and you may not agree with this, some underlying problems that I think could come back to bite us if, depending on how things go over the next few years. But certainly the underlying fundamental, I would say, biggest storyline that's not necessarily maybe as accessible to a lot of people is this housing supply that you mentioned, Keith. And over the decade that ended in 2020, I would guess, based on my analysis, about 4 to 5 million housing units that were not built, that in a sense should have been built. But we were short 4 to 5 million housing units relative to the number of households that were being formed during that same time period. And so that has set us up for this market that we're in now in the 2020s, where we're seeing, despite the fact that home prices are going up and are out of whack with fundamental price to income ratios. In other words, affordability is a problem. Despite that fact, home prices continue to go up because you have this underlying lack of supply. And so you have enough demand to fuel rising home prices given the lack of supply, if that makes sense.
Yes, you mentioned the paltry volume of sales, which is really one consequence of this constrained supply. And there are so many ways to measure it. You threw some numbers out there. Just using Fred's active listing count, they have 1.5 to 2 million homes normally available. Inventory bottomed out near a jaw-dropping, just fantastically paltry 350,000 units in 2022. And then the latest figure is about 730K. So really doubling off the bottom, but yet still far below what is needed. And, Darren, in 2021 and 2022, I started informing our audience that the housing crash of this generation, it's already occurred. It was a supply crash which hedges against a price crash, even amidst a tripling of interest rates. So I guess, Darren, from your vantage point, when will this low housing supply abate?
I think we're on track. I mean, if you look at the housing starts numbers, and especially on the single family side, well, first of all, let me back up. I think on the multifamily side, you're seeing signs that we've, in a sense, caught up with housing supply. And you're seeing the multifamily sector start, in terms of the builders, start to pull back, I think, because of that. And one piece of evidence of that is the slowdown in rent appreciation. But then on the single family side, we're still seeing pretty robust increases in housing starts and builders starting housing units. And I was just looking at the latest numbers for April, up 18% year over year. And we're at over 1 million housing starts in April on an annualized basis. I believe that million number is enough to supply the new households that are being formed and are projected to be formed over the next few years. And so we're kind of at a place where at least we're treading water in terms of housing supply. And I do think there's some demographic trends that could, by the year 2030, which may seem like a long ways off still, but by that time, we would see this kind of reverse a little bit. And the demographic trends I'm talking about are slower population growth. The birth rates, there's a big article in the Wall Street Journal a few weeks ago. Birth rates are surprisingly not really coming back. They dropped during the pandemic, have not really come back, and in many areas, including the US, are below replacement level in terms of replacing the population.
At 2.1, yes.
So not to get too deep into the demographics, I'm not a demographer, but I think that combined with these increases in housing starts that we're seeing, we will see that supply in the next 5 years, maybe when I'm on next time with you, to see that it is a slow moving train, but I think we're headed in the good direction in terms of that housing supply. And there's already, I would argue, some early signs that 2024 at least, it's still a low supply environment, but it's at least somewhat better. Inventory is a great kind of barometer of market health. And if you look at inventory numbers by market, which we do, you do see some markets, all of a sudden inventory is starting to spike. And that to me is just a signal that those markets could be softening in terms of prices and even in terms of sales. So you see some markets in Florida popping up like that. But whether or not we're talking about now or anytime, it's a great metric to look at for anybody investing in real estate, especially at a market level, is that inventory of homes. You can look at months supply of inventory for sale. 6 months supply is a great milestone. If there's 6 months supply, that's a balanced market. If it's below 6 months supply, it's a seller's market. And if it's above 6 months supply, it's a buyer's market. So just a general kind of rule of thumb to look for there.
Sure, we've seen months of supply, 3 months or less in an awful lot of places. However, you alluded to coming potential problems for the housing market earlier. Can you tell us more about that? Or have you already done that with talking about a potential softening with some inventory coming on faster in some markets?
Well, I think I still, I think your thesis about the housing crash has already happened, and it was a supply crash is very interesting. But I still believe when I look at price to income ratios over time, home prices versus incomes, we've diverged from that long-term mean of that price to income ratio in the last couple of years. And we saw that during the bubble of 2004, 5, 6, but it's even more dramatic in the last couple of years, where we saw at the peak of this, the actual home prices we were seeing nationwide were about 30% above what we would expect the price to be based on incomes and that historic price to income ratio. And so I do expect a reversion to the mean at some point. Now, whether that could occur as a pretty sharp correction, although I can't point to a specific trigger that would cause that correction necessarily. It could occur more of a stagnation over time, where home prices kind of flatten out and don't increase less than the median long-term average. But I do believe that we will see a reversion to that mean eventually, especially as we see more supply coming onto the market. And so that, I think it's actually healthy for the housing market, but it could be experienced by many people as weakness in the housing market, because you could see home prices decline a little bit, especially in certain markets.
You can watch this one next.